Hello guys, how are you? As I promised, I will do like a kind of review. Sorry, my English is not my first language. I will do my best, and I want to thank you all to, I don't know, just to join this community, and I think has potential to grow and make a nice community, ICT traders community. So I will start now with gold. Okay, this is a daily chart. So what I see here, let me take this off. Sorry. Okay, so from my point of view, my humble opinion, I want you first to make you aware that I'm not ICT and I don't control the market. I just try to make an analysis and try to find the best scenarios where the price can go. So I will do that, okay? I will do like a kind of analysis as I see it, okay? So first thing I would like to make you see, to make you aware, is this range. Okay, this is a range, this is the price range. So every candle is a day, okay? And what I see here, well, normally the price, and when after doing like a range like this, it's a quite bullish movement. Price tend to retrace to this area. So with Fibonacci, what I have like these levels. You can see this 0.5. This is the half from here to here. So I have this half, the upper half. It's like here ICT called this upper half premium, and the lower half discount. Okay, so now price is going to this area, which is his discount. Okay, and he has these levels 0.62, 0.69 and 0.605, which is the golden line. Okay, no, so this area between these two lines, green lines, this is the optimal trade entry. Okay, from here to here, this area is the optimal trade entry. That means that we can have this in mind. So when price retraces this area, we can make zoom, okay, and search and wait and search for like a setup to form. Okay, so this is an area to have in mind. So price now is retracing, okay, to the discount area, and I think you are aware of this. We have a daily fair value gap. Okay, this is very important to have it in your charts. So as you can see, we have a correlation, or we have like this fair value gap is sharing this area. Okay, so this is important to know. This is a strong area to keep in mind to search for a setup. Okay, you have the optimal trade entry, we have the fair value gap, and also we have I will do it until here. We have a breaker, a bullish breaker. Okay, just quickly, the breaker is when you have this formation, a low, high, lower low, and you break this structure, okay, So the upper candle, in 4 hours you will see it better, but in 4-hour candle, this is your breaker, our zone to wait for price to retrace and wait and confirm, okay, like a setup for going bullish. So this is a bullish breaker. Okay, so we have a daily fair value gap breaker, which in 4-hour time frame is a bit more accurate. I will take these two upper candles. Okay, so we have the daily fair value gap, the breaker. I'll put 4-hour breaker. Okay, and also we have a 4-hour fair value gap. Right, so keep in mind that that's very important to have it in your charts, no? These areas. I will take off the Fibonacci. So what else we have? Very important, we have two relative equal lows. This is liquidity waiting for being taken, take it. Okay, we have that. This is levels to have bear in mind. This relative equal lows, and we have this level, which is the previous week low, also to have in mind. Okay, very important level, right? So also very important to have in mind this fair value gap, 4 hours, 4-hour fair value gap. As you can see, price already break the structure. Okay, all this was liquidity. As you can see, this is not support, this is liquidity. Okay, price took that all liquidity. It did like a market how I call market shift structure, or market structure shift. I don't remember, MSS. Basically, it's like it breaks the structure, the price. Okay, break the price, break the structure, and now we are like bullish. So price retrace to the fair value gap, 4-hour fair value gap, took liquidity. As you can see, the price stops like 3 times in the consequent encroachment, the half of the fair value gap, and then we have to wait because we don't know yet until the week starts. And also we have to take in mind, we have to have in mind the calendar, okay, the economic calendar. So for the moment, price retrace, okay, to premium. As you can see, if we take this high to this high, this high to this low, price went to premium, okay, retrace to take liquidity, and now we should wait, okay, because price maybe can go up, take this liquidity, this previous high liquidity, and then attack this area. Okay, so we should wait at least tomorrow, or let's see, no, or just price can start the week taking all this liquidity, then break a structure, and then continue. Okay, so that is my opinion. So interest areas are previous week low, relative equal lows, and this area. Okay, and that's all I can say for now. Thank you for this analysis. Hi guys, how are you? Once more here, analyzing these charts. We have ES and Nasdaq. ES on my left, Nasdaq on my right. Okay, so basically I already add some lipstick in the charts. Okay, and I did put the Fibonacci from this range to this range, sorry, from this minimum to this maximum, and also here you have the Fibonacci from this low to this high. Okay, and why I did this, just to show you how price already have a visit discount area. Okay, and the price did a bullish movement, you can see here, and then retrace to discount. Discount is from 0.5 to here, so all this area is discount, and we have the optimal trade entry, as I said before. Okay, here also. So as you can see here, the price perfectly touched the consequent encroachment of this fair value gap, monthly fair value gap. Sorry, I didn't say that, but I'm in a monthly time frame. So this is a monthly fair value gap, and also here price visit the fair value gap, the monthly fair value gap, but this time it went lower than ES. Okay, this is a monthly chart, so these are levels very important to have in mind. I take off the Fibonacci. Okay, I also annotate this monthly fair value gap. This is the he called this CB. CB is a CB fair value gap. Okay, CB is like means sell side imbalance. Sorry, I will put it in text because I need to put it like this. CB means CB. Right, so that is CB, sell side imbalance. Because we have this imbalance, price still have to come back, no, and reprice this fair value gap. So in the buy side, there's this inefficiency. The buy side still didn't reprice this imbalance. It's just like a more accurate way to differentiate, no, the fair value gaps. But basically it's a fair value gap. Okay, so price still didn't visit this area, this fair value gap, so it's very important to have in mind this area. Here price, yeah, indeed visit the monthly fair value gap. Okay, so keep that in mind. And also this is a very important level. If you see these huge wicks, in this case it's a monthly wick, ICT he recommends see it like an imbalance, like a fair value gap or an imbalance basically. And a very important level is the half of this imbalance, which is the consequent encroachment. Okay, so I annotate this consequent encroachment. Okay, I put consequent encroachment CE / monthly wick because it's a monthly wick. So I have this level in my chart, and I have this level in my charts also for Nasdaq. Okay, so let's go to weekly. Okay, this like this. Right, so yeah, you can see here perfectly match. Price took all this liquidity. Okay, all this was without reprice, was waiting for being taken, and price did that. We have also here, we have relative equal lows. Price did take all this liquidity. Okay, and look how beautiful is this. We have a weekly fair value gap here. Consequent encroachment. Look how beautiful. Okay, this is a weekly fair value gap. Weekly. Where is weekly? Here. So nothing's random. Okay. Basically, that's the message. Beautifully. If we go more deeper here, I think maybe we can see some divergence, some SMT divergence. Okay, for the moment, let's keep this in mind. Okay, so obviously, price break structure. Okay, a huge break of a structure. What is doing the price now is retracing. Fibonacci. Price now is in premium area. Okay, it's visiting the monthly fair value gap. Okay, the same here. Price did all this way down. Now it's retracing to premium area, where we can see, or we can have in mind, levels like this. Like, obviously, I will notate it like this. I will put here, this is like a previous high. I will put here. Okay, so you can see it very clearly. This is a very interesting level. Also here, this previous high is the most close, okay, to be attacked by the price, is liquidity. Okay, so levels to have in mind this week. This one is a very important level. Also, we have the previous week low, which is this level. I will take the Fibonacci out to be more clean. Okay. So these are important levels to have in mind this week. Obviously, we have this weekly fair value gap, and we have one more here. Keep in mind these two fair value gaps. Okay. These are in balance. Price tends to visit these areas. And also here we have this weekly fair value gap. Okay, so I will go to daily. I hope you can see this. I will put it like this to make it more clear. Okay, beautiful. So as you can see, we have this area. We have a volume imbalance gap. Well, it's kind of, yeah, It's not like a liquidity buoy. Liquidity buoy is when there's no volume at all, which in fact there's no volume, but we can in fact do it. Yeah, this area is a liquidity buoy. Liquidity buoy, daily one. It's a daily. Okay, which price did visit, but didn't how you call this in English? Didn't rebalance everything, the price, just this imbalance, just visit like a small tiny part of this imbalance, taking this lower, this low. So we can expect price goes again. Sorry, this here. Okay, put this here. Okay, so sorry guys, I'm trying to make this cleaner so you can understand. Okay, the same we have here on ES. We have this liquidity buoy, which price stops in the consequent encroachment beautifully, as you can see. Very random. No, it's not random. It's not random, guys. It sometimes seems random, but it's very manipulated, this market. So also here we have another liquidity buoy. Sorry, this is this is a liquidity buoy, but this is more like ICT called it a volume imbalance gap, because there's only wick, there's no the body of the candle. This is a volume imbalance. When there's nothing at all, no wick, no candy, no wick, sorry, no wick, no body, no body. I mean no candle body, the body of the candle. That's a liquidity buoy. But in this case we have a volume imbalance, which is only, we don't have the body of the candle, we have only the wicks. So it's kind of an imbalance. Price will tend to visit these levels. Okay, also here. So as you can see, we're going from higher time frame to lower time frame. We are on daily now. So this is the previous week low. Okay, and this is the closest previous high. Okay, in my opinion, I need to wait. Okay, price already took liquidity from this fair value gap, daily fair value gap. So I don't have a very strong opinion now. Price is already making a retracement to premium area, so we should weigh maybe how price reacts this week. Okay, I would like to see maybe a divergence, maybe like this. Price go up, take liquidity and a bit more high, breaks and goes down, and maybe price here take liquidity, goes higher, making this, I will change the color, this divergence. Oops, sorry. I will take, so this, something like this, you see? Here you have like a higher high. Sorry. You have this. You have this maximum and this maximum. This maximum and this maximum. So you have this, and here you have this maximum, or this high, and you have this. So that's a divergence. On one side you have this structure, on the other side you have this structure. Okay, so that that means that the price is not interested in continue, so we are expecting a lower price. So we can looking forward for bearish setups. Okay, so just to finish this video, my key levels are this one. Okay, we have these fair value gaps, weekly and monthly, waiting here, which we already went there, no? But very important to have in mind. If price go to visit this high, let's see how it reacts. Also here, okay, bigger like this, okay, and also this level, I find it very interesting, which is the previous week low. Okay, so let's wait what happened, how price reacts, how it starts the week. But these are the key levels. Something more to add? Yeah, let's see how price reacts. Okay, guys, it's not very, in this kind of scenarios, the best thing is to wait, because now price already took move a lot, and there's not so space, there's not so much room to have like a very high probability. So let's see how price reacts this week, this start of the week. But keep in mind this and these levels, important levels, and how price react to them. Thank you, guys, and I hope this is a bit insightful. Thank you.